Korey Matthews. This is for Finance 381. I'm going to be doing a financial analysis on three companies. I chose Hornbeck, Microsoft, and Nike. I'm going to give you a brief insight on some of these companies. Hornbeck is one of the leading providers of marine transportation services to exploration and production, oil field service, offshore construction, and military customers. Microsoft was founded in 1975 by Paul Allen and Bill Gates. The corporation is one of the largest and most influential companies in the personal computer industry. They're also one of the biggest software companies in the world. Nike was founded in 1964 by Mr. Bill Bowerman, a track and field coach, and Phil Knight, a middle distance runner from Portland, who was enrolled at the University of Oregon. The company's original name was supposed to be Dimension 6. They ended up hiring a guy named Jeff Johnson, who came up with the name Nike. All right, so today I'm going to talk about short-term solvency, which is the ability to pay bills in the short run. It's also a measure of liquidity. Long-term solvency, the ability to meet long-term obligations and financial leverage. Asset management, intensity and efficiency of asset use, profitability, and market value, how the market views the business. All right, so first, I want to make a 6-month loan to one of these companies. I have to pick one. So today we're going to talk about, as far as the short-term solvency, we're going to talk about quick ratio, cash ratio, and current ratio. Let's start with the current ratio, which is current assets over current liabilities. The current ratio is mainly used to give an idea of the company's ability to pay back its short-term liabilities with its short-term assets. During the past 5 years, Hornbeck Offshore Services' highest current ratio was 6.96 and the lowest was 2.13. Example of this would be like Hornbeck at its highest has 6.96 in current assets for every $1 of current liabilities. Microsoft's highest current ratio over the past 5 years is 2.71 and the lowest was 2.5. And Nike's highest current ratio in the past 5 years was 3.47 and the lowest was 2.52. Next, we're going to take a look at the quick ratio, which is the current assets minus inventory over current liabilities. And the quick ratio is more conservative than the current because it excludes inventories from the current assets. Inventories generally take time to be converted into cash, and if they have to be sold quickly, the company may have to accept a lower price than book value for the inventories. Hornbeck shows signs of low inventory because their quick ratio has barely changed from the current. Their highest in the past 5 years was 6.57, and the lowest was 1.98. Microsoft also has very little change in the current ratio, quick ratio. Could indicate low inventory as well. Their highest quick ratio in the past 5 years is 2.53 and lowest was 2.30. Nike appears to have higher levels of inventory than the other two companies. There's a significant difference between the current ratio and the quick. Over the past 5 years, the quick ratio is 2.31 and the lowest was 1.47. The last liquidity ratio I'm going to discuss today is the cash ratio, which cash is cash over current liabilities. Excuse me. The cash ratio is a measure of the company's liquidity. It can determine if and how quickly the company can repay its short-term debt. Hornbeck appears to be more liquid than the other two companies. Its highest cash ratio in the past 5 years was 5.3 and the lowest was 1.68. As far as the cash ratio, Microsoft shows higher liquidity than Nike. Their highest cash ratio in the past 5 years was 2.06 and the lowest was 1.83. Nike has the lowest overall cash ratios. This could be because they carry more inventory than the other two companies. Over the past 5 years, their highest cash ratio is 1.52 and the lowest was 0.94. For the short-term loan, I ranked the following three companies from 1 to 3, 1 being the company I'd give the loan to. Hornbeck, just because they were more liquid than the other two companies. Microsoft, because they were a little more liquid than Nike, but honestly, I was indifferent. I would probably give any one of these companies a short-term loan, but I had to pick one. So next, I need to make a 5-year loan to one of the three companies. So I used equity multiplier and times interest earning ratio, or TIER, to determine the long-term solvency. The equity multiplier is total assets over total equity. The equity multiplier is a measurement of a company's financial leverage or the use of debt to acquire additional assets. Hornbeck, over the past 5 years, their highest equity multiplier was 2.24, the lowest was 2.10. Microsoft, their high was at 2.05 and their low was at 1.81. And equity multiplier for Nike, their highest was at 1.71 and their lowest was 1.50 in the past 5 years. Now we're going to look at the times interest earn ratio, which is a measure. It measures the proportionate amount of income that can be used to cover interest expenses in the future. Hornbeck's total times interest earn ratio was pretty low for the past 5 years. The highest was 3.35 and the low was at 1.26. Microsoft's highest tier in the past 5 years, 137.87, and the lowest was 29.29. Nike's highest was 161.90, and the lowest was 69.43. For a long-term, 5-year, $1 million loan, I ranked the same way I did the short-term solvency. I ranked the companies from 1 to 3, 1 being the company that I give the loan to. Nike I chose at 1, Microsoft at 2, and Hornbeck at 3. It was hard to choose between Nike and Microsoft. Both had low equity multiplier and both had a consistent ability to cover interest expenses in the future. All right, and last, I'm going to talk about investing in a company, 50% into a company. I'm going to look at profitability, asset management, and market value ratios. We'll start with Hornbeck. Profit margin, which is net income over sales, shows how much profit for every dollar in sales. The highest in the past 5 years was 13.94 and the lowest was negative 0.67. Total asset turnover is sales over total assets. It's also a sign or a look at asset efficiency of a company. The highest was 0.23 and the lowest was 0.19 for Hornbeck. As far as the return on equity, which is a measure of how the stockholders fared during the year, and it is net income over total equity. The highest for Hornbeck for the past 5 years was 9.05 and the lowest was negative 0.27. The return on assets, which is a measure of the profit per dollar of assets, is net income over assets. The highest was 4.08 and the lowest was negative 0.13 for Hornbeck. And the market value ratio or price earnings ratio can be defined as price per share over earnings per share. In 2014, it was at 10.43. The higher the PE are often taken to mean that the firm has significant prospects for future growth. All right, now let's talk about Microsoft's profit margin, total asset turnover, ROE, ROA, and P&E. Their highest profit margin in the past 5 years was 33.10 and the lowest was 13.03. As far as total asset turnover, the high was at 0.72 and the low at 0.155, excuse me, 0.55. The ROE, the high was at 44.84 and the low was at 14.36 in the last 5 years. Return on assets, or ROA, the high was at 23.77, the low was at 7.00. The P&E was at 17.47 in 2015. All right, and last company, Nike. Profit margin high was 10.22 and the low was at 9.53. Total asset turnover, the highest was 1.54 and the low is at 1.47. ROE, highest was at 27.52, the low is at 21.77. ROA, highest is at 16.29, low 14.5. P&E 27.48. I ranked these companies from 1 to 3, just like I did the last for short-term solvency, long-term solvency. I did the same thing for this. I ranked them from 1 to 3, 1 being the company I give the loan to. I chose Nike as one that I gave the loan to. Microsoft is two, and Hornbeck is three. I chose Nike in the situation because they were more asset efficient than both the other companies, and there was less risk in Nike for a return. Thank you.